Hello, welcome. This is Business Breakfast, broadcasting live from our studios here in Lagos, the nation's commercial capital. I am Frank Omalape. It's Friday's edition of the program, and since the start of the new year, issues that dominated conversations among experts is the 2022 budget, the rising debt burden, and key economic policies waiting for implementation in the new year. Some of the issues that dominated conversation. More so, these conversations have raised some concerns home and abroad, given the figure allocated for debt servicing in the 2022 budget at 3.8 trillion naira. More worrisome is the continuous borrowing approach of the Buhari administration as an alternative to funding infrastructure. But the big question is how sustainable. Recently, the World Bank said rank Nigeria 5th on the list of 10 countries to which it has the highest debt exposure. The International Development Associations lent to countries based on their relative poverty or per capita income levels and at low to zero interest rate. That's be the argument. Now, Nigeria qualifies for funding based on its per capita income levels. To non-economists, the announcement that Nigeria is 5th on the list of International Development Association borrowers is alarming. So that's the argument, that because the low income or per capita of average Nigerian is why the nation should borrow. But let's break it down further. Between 2015 and 2021, the country's debt burden has since risen from 12.1 trillion naira to about 38 trillion naira in 2021. So let's look at the public debt, the public debt first and domestic debt second. Recall that Nigeria raised a sum of $4 billion in Eurobond in September, dubbed or captioned one of the biggest financial trades on the African continent after the order book peaked at $12.2 billion, which enabled the federal government to raise an additional $1 billion more than the intended $3 billion capital raise. So on the other hand, domestic debt also recorded an uptick as federal government domestic debt rose to $44.44 billion, while state domestic debt increased to $10.23 billion. Well, if you look at Nigeria's public debt between 2015 and 2021, let's break it down in a moment. In 2015, the total debt stock stood at 12.3 trillion naira. When you move to 2016, just a bit of that to 17.36 trillion naira. In 2017, you have about 20.3 trillion naira. Then in 2018, the figure jumped to 22.4 trillion naira. And then it continues in 2019 to around 25.7 trillion naira. Then in 2020, the total public debt of the country stood at 32.22 trillion naira. That's in about 2 years' space, the country's debt has doubled. Now in 2021, the total public debt stood at 38.0 trillion naira. Well, that's what been the much talking point of experts, and of course the World Bank ranking Nigeria the 5th among the 10 countries with the highest cost debt, or the highest revenue, or will I say debt service, the total amount used in servicing debt. But let's take a look at Nigeria's debt profile now. Well, the country has spent about $520.78 million on external debt servicing in third quarter of 2021. And then when you look at the total debt stock rising by 2.54 trillion naira from September 2021, and then one calls for question, where are all these monies going to? That's the biggest question. Of course, the federal government will always say they borrow for infrastructure. But federal government hopes to say, they are saying that they are hopes to push the public debt back down. But of course, as it stands now, the recurrent expenditure in the 2022 budget appropriation, and of course, if you look at all of that, the revenue target, the oil revenue target, both the oil revenue and the non-oil revenue, if you put that together, it doesn't amount to much. And so about 50 50.22 trillion naira. Analysts have said that the debt stock may rise to about 50.2 trillion naira by 2023. The government, the Buhari administration, is just about 17 months to the end of its administration. But if you look at it now, domestic debt, a total about 28.7 trillion naira, and external debt at 21.47 trillion naira. That if you put that amount together, that's about over 50 trillion naira in total debt stock. Now, the World Bank predicts that Nigeria's debt vulnerable and costly again, given the breakdown of the country's debt burden. So the question is, what are the implications of this? And so this of course will dominate our conversation today on the show. So I need you to just stay glued to your TV set and let's get the conversation coming. All right, here's what's coming up in a moment. Nigeria's debt servicing gobs about 76% of revenue as World Bank raises concern on country's debt cost and vulnerability. Nigeria's debt stock rose from 12.1 trillion naira in 2015 to about 38 trillion naira in 2021. Our focus, therefore, in the first part of the conversation is on the World Bank position, the country's debt cost and vulnerability. Dr. Leke Ebenezer is an economist. He'll be joining us later on the show for more analysis. Also on the program, investors' appetite rises towards the consumer goods in the new in BUA's listing of 18 billion ordinary shares on the NGX. And so we'll be taking a look at that how much of that is are investors taking advantage of. So we'll be back in a moment. Let's get serving you the breakfast in a moment. Please stay with us. If you're just joining us, this is Business Breakfast coming to you live from our studios here in Lagos, Nigeria's commercial capital. So let's, just before we get into the conversation, let's begin with some of the top stories making the rounds. The federal government has disclosed that it was putting measures in place to ensure further reduction in the cost of liquefying petroleum gas, popularly called cooking gas. It was made known while reacting to the recent marginal drop in the cost of cooking gas. According to investigations, the price of 12.5 kg LPG has dropped from 8,800 naira to between 8,400 naira and 8,200 naira, respectively. In some outlets, the price of commodity dropped to between 7,800 and 8,000 naira as well. In November, the cost of LPG kept rising, jumping by more than 240% between January and October 2021, forcing consumers to shift to other alternatives. However, Program Manager, National LPG Expansion Implementation Plan Office of the Vice President Dayo Adesina stated that the federal government is setting up initiatives which will hopefully see to further drop in price regardless of the international cost. And in the meantime, the Manufacturers Association of Nigeria has said that the introduction of excise duty of 10 naira per litre on all non-alcoholic carbonated and sweetened beverages will make Nigeria lose investment to other countries. The Minister of Finance, Budget and National Planning, Zainab Ahmed, had on Wednesday announced the introduction of the new tax during the public presentation of the 2022 budget in Abuja. However, the Director General man, Mr. Segun Ajayi Kadri, said in a statement that the affected subsector had contributed significantly to the economy and taxes despite the debilitating impact of naira devaluation, inadequacy of forex, and the COVID-19 pandemic. According to him, introducing excise on non-alcoholic beverages is likely to cause 0.43% contraction in output and about 40% drop in total industry revenues in the next 5 years. And in the meantime, the federal government says it spent about $1.68 billion on food importation from January to September last year. The Central Bank of Nigeria disclosed this in a report on sectoral utilization of foreign exchange for the third quarter of 2021. According to the CBN, the government spent $163.6 million, $197.7 and $171.05 million in January, February, and March respectively, while $156.3, $135.7 and $213.58 million were spent in April, May, and June accordingly. The report revealed that $184.6 million and $188.8 and $271.5 were spent in July, August, and September, respectively. The governor of the Central Bank of Nigeria, Godwin Emefiele, during the Bankers Committee retreat recently held in Lagos, said the country is able to diversify the economy, reduce unemployment and poverty. The level of insecurity in the country will reduce, according to Emefiele. Emefiele further stated that the banks had done a lot to support the economy and would still do more to catalyze the economy for growth. Well, that's it for now with the top business stories. Coming up in a moment. After this break, our focus is on the World Bank's position on Nigeria's debt profile as World Bank raises concern on the country's debt burden. We'll be back in a moment. Please do stay with us. If you just joined us, this is Business Breakfast coming to you live from our studios here in Lagos, Nigeria's commercial capital. Right, let's get straight now. The World Bank disclosed that Nigeria's debt, which may be considered sustainable currently, is vulnerable and costly. According to the Washington-based global financial institution, the country's debt is also at risk of becoming unsustainable in the event of macro fiscal shocks. It further stated that the debt to the GDP in Nigeria is rising quickly, and the total stock of debt in absolute value has almost doubled between 2016 and 2020. And without a policy change, is expected to reach 40% of the GDP by 2025. The bank further expressed worry over the nation's cost of debt servicing, which, according to it, disrupt public investment and critical service delivery spending. So let's make sense of this development now. Mr. Garba Kofi is CEO, APT Securities and Mutual Funds Limited. Thank you for joining us. We appreciate you for your time.
Thank you for having me.
Okay, so I'm sure you've been following the development. The World Bank says the debt to GDP in Nigeria is rising quickly, and the total stock of debt in absolute value, it says it's almost double since 2016, and without policy change, this is expected to reach about 40% of the GDP by 2025. Give us your view. What are the implications of this?
Well, the implication of this to us is that as long as debt keep on rising, it risks high rates, because therefore most of those who are willing to lend money to us will ask for more high interest rate, and they will put more condition to us. And the more they put the condition to us, the more it becomes difficult for the government to bear with. So definitely sure it's a concern, and the government need to look at it and see that they review the matters as quickly as possible. So we can see that the president now appointed Dr. Salami as the chief economics advisor. I think this may be in alliance with this, what the World Bank have seen, that he need an economic advisor that will review it from time to time so that we align with their terms.
But if you look at what the federal government is saying, that the issue of debt at stock that people are concerned about, it's not problem. That what we have is a revenue generation problem. If that condition, or what the picture that the World Bank is painting, is anything to go by, should we be worried that the federal government is not even concerned about these issues and implications that the World Bank has raised?
Well, you see, the World Bank have to raise this, because when you look at the rate of the growth, just take us 10 years back. What was our portfolio of the debt compared to the rate of the growth is very, very enormous. And that is what the World Bank is saying. If you look at it, for the last 5 consecutive years, we have a deficit budget. And what means a deficit budget? You are borrowing not in billion, in trillions. So if we continue growing at that rate, definitely sure it will affect the fear, and it can have a multiplier effect. So the rate of the growth is what major concern. If you look at exposure of the debt to the GDP, you will say that we are not up to Ghana, we are not up to Kenya. Most of these countries, they have higher rate. It is growing. It what keep everybody concerned. You had a deficit of 6 trillion, even for 2020. And what does that mean? That you need to borrow about 6 trillion to increase your debt. And that is a major concern.
Just hold on a moment. I just want to hold your thoughts a bit. When we come back, we'll look at this, because if you say, I'm aware we have to go on break. Let's just take a break. We'll be back in a moment. Glad to have you back now. Mr. Garba Kofi is still here with us, as CEO, APT Securities and Mutual Funds. We'll be looking at Nigeria's rising debt burden and, of course, some of the concerns raised by the World Bank. Well, thank you for staying with us. We appreciate you, Mr. Kofi. Yeah. Before we went on break, you were comparing us with other African countries, how that our debt stock is not up to these countries. But if you look at what we're spending and some of the figures given by World Bank, about 76% of what we're using to service our debt, I mean, the revenue, talking about how much we're using to service our debt, is about 76% of the total revenue generated. How concerned are you about that?
Well, it shows you that we are very weak in generating revenue. Remember that up to now, the people that pay tax are still in a few percentage. We are talking of revenue generated that is less than 10%. Most of the African countries, including South Africa, they are talking of over 20% internally generated revenue of their GDP. We are talking of a single digit less than 10%. So what we ought to do is to open our tax and make sure that all those that doesn't pay tax, they pay tax. And if they do so, you will see that we will generate enough revenue that will be able to service our this. Let me give you an example of Lagos State. Today, because Lagos decided to open their internally generated revenue, they are generating more than what they can get from the federal government. Kaduna State have just recently started. They are generating more than what the federal government is giving them as allocation. So what shows that there is the avenue that we can generate more if we decided to do. So it's up to the federal government to wake up and look at all the loopholes and make sure that they generate more enough. Don't forget the 2022 budget, they have opened other window for the generating more revenue. They have reviewed some of their taxes, and some of the revenue that just go without taxes, now they are under tax. Remember that all the social medias, now they have put them under tax. And today they are saying that even for the sugar beverage, like Coca-Cola, Fanta, they are going to pay more tax, about 10 naira per liter. So what it means that the more the government open up for the revenue, the more the percentage and the proportion change. And I believe that we have the potential, we have the capacity to generate more internally, which if we do so, that will reduce the percentage of proportion we are servicing our debt.
Where do you think the problem lies? I mean, if you look at it, the revenue target of the federal government, both from oil revenue and of course the non-oil taxes, it's amount to around 10 trillion naira in the 2022 budget as well. But if you look at the recurrent expenditure and the deficit as well, put that aside with the total amount that will be used in servicing debt in the 2022 budget, that seems to be like a child's play according to many. So where do you think the problem is, that the federal government is not able to fund its own budget and again looking what to generate? Because it seems that the government is exploring all the options. Tax is there, oil is there. So what more options do we have here?
Look, if you know what the government is spending in subsidizing petroleum, subsidizing electricity, education, if you look at those subsidies and you see the quantum and the trillion they are spending in those subsidies, if they reduce those subsidies, we'll see that we'll have enough. So there is many options the government can look into. It's only that do they have the power and the willingness to look into those options? If they look at those options, I can tell you that they can generate more than enough to take on the services of the debt. And that will not be an issue.
Okay, let's wrap it up now, Mr. Kofi. How seriously should the federal government take some of the issues and concerns raised by the World Bank in the new year?
You see, the World Bank have said it numbers of times that look, at this challenging period, do not continue spending much into subsidy. We have seen it. The federal government is spending over 280 billion per month just to subsidize PMS. One single product out of 5. Do you know how many billion they spend to subsidize the electricity? So if they can temper those subsidies, that will give them enough buffer to service their debt without much issues.
But again, the question a lot of people will ask is that, is the country ready for removal of subsidy?
It all depends. The president have no, he's not coming for the next election. And if he chooses to get it right, he can decide to do it.
Right. I think we need to leave it there. Thank you so much, Mr. Garba Kofi, CEO, APT Securities and Mutual Funds Limited. Thank you for your time on Business Breakfast.
Thank you.
You're still watching Business Breakfast, coming to you live from our studios here. Still to come after this break, Nigerian Exchange Limited announces the listing of Bua Foods PLC on the main board of the exchange. That's a talking point after this break, as Mr. Ambrose Amodian joins us here for more analysis of that listing. We'll be back in a moment. Please stay with us. Glad to have you join us now. This is the last part of the program. Let's get straight into looking at the market yesterday. Just before we get into the conversation, of course, all share index rises by about 0.03% yesterday. But more especially, we'll be looking at the gain for the week and the performance of the market since the start of the new year. Well, more importantly, we'll also be looking at the fact that the market performance was driven much more by some activities, especially the listing of the Boa Foods PLC on the Nigerian Stock Exchange. About 18 billion ordinary shares of Boa Food were listed at 40 naira per share under the consumer goods sector of the NGS. So with the trading symbols, you can be seeing them as Boa Food henceforth. Well, to put some perspective now is Ambrose Amodian, Chief Research Officer, Investigator Consulting Limited. He's a regular feature on Business Breakfast here. Thank you for joining us. I appreciate your time.
Thanks for having me again. Thank you.
Okay. Well, let's begin from the performance of yesterday. And you're going to give us the performance of yesterday. Thereafter, of course, what are some of the growth drivers, or will I say the drivers for the week? It's just the first week of the new year. And so we're seeing positive trends in the market, and we're seeing positive sentiments dominating activities in the market. So what would you attribute this to? I know a lot of people will say, okay, there's a lot of activities like listing of the Boa Food on the NGS.
Yeah, I would say that in Nigeria, we have seen a change of events, especially in the last 5 years. If you take that stretch, we say for the 12 years at stretch, our market has been up in the month of January 7 times and down just 5 times out of 12 years at stretch. It tells you that January has something that goes for it. But before now, because of January 1st, people say that, oh, January is where people are selling to pay school fees to do all this one to start the year. But the market has changed. And what led to that is that, one, some portfolio investors are changing their strategy, and also the NSE came with a policy that, at the end of every year, especially the last quarter of the year, you release your unaudited account within the 30 days, which falls in January.
Right.
Before now, it is not done. It was done on the 2009 was the first time. 2018, was the first time it started. Then, from 1918, you see, market started adopting it as a kind of a trend or a sentiment that always support the market. Then, now that we're already in that January, we have seen that the first trading day, even yesterday, has been on the green. It tells you that something is also on the line. And don't forget that we are seeing positive numbers from the economic angle, and also we're expecting that to see inflation figure for this month, any moment for December, any moment from now. Also, MPC meeting is coming up this month too. And also, crude oil has rebounded even above $80 again. They tell you that there are something going for our market at this weakness. Really, if crude oil is bouncing back, despite there is adjustment in supply, or there's kind of a crisis somewhere that's going to push the price, but it's going to impact our own reserve. That also will attract foreign investors. Right. Also, if you look at the market activities, those big names in the market, you see foreign investors are still looking at them. Stock like Teplat, stock like Ete, can see that foreign portfolios are still interested in those stocks. Before one, these stocks are listed, there's a dual listing they have. Separate was listed in Nigeria, also in London, same also for Ete. You see, many foreign investors that want to move money away from Nigeria easily can buy into that stock. And that's why you see activities in these stocks are also their high cap stocks. When they gain, they're going to impact on the market positively. That's what we're seeing. But the good thing that now, in the past 2 days, we are seeing that dividend-paying stocks are starting gathering momentum in terms of volume. Tells you that retail investor, local investor, and some student investor are also looking at work the position ahead of dividend, knowing that the year has ended. From this month till end of March, we expect companies that have December as year end to raise their full year result, and it will come with reward. And that also with the position ahead of that. Also seeing that most of these companies dividend yields are high and above the treasury bill, now rate or return. Most of them are seeing that stock can give them quick return in the short run. For that, we are seeing that now they are positioned ahead of that. These are the factors that are also supporting the month of January and the first week of the year. And also, I see that it might likely sustain in the next week because most of the portfolio managers are not back to the market because of the holiday. That means, from next week, we are seeing going to a full trading week. Don't forget that we had a 1 day public holiday this week. That was on Monday. That means we are trading for just 4 trading days. Then when we enter the next week, the first straight full week for the year of January, we expect that most of the fund managers will come back to the market with still more activities, knowing that as I speak now, we just discussed about about debt, knowing that the government has the task to borrow money now because they want to fund the deficit budget of 2022. But what rate are they borrowing? If they continue to borrow at a lower rate, as I said earlier, that will also what we call funds will be leaving most of the fixed income market to equity market, but it depends on the policy that we're expecting. Because rumor of removal of subsidies on the way, and other things going to happen in terms of seeing the economic data. But I don't expect that CBN or MPC meeting they will change interest rate on their first meeting for the year. If not, if they do that, they're going to boost the little recovery we're seeing. Because as to tell you, whether economy is recovering, as to tell you, those economic recovery are still very fragile and weak. We are not expecting the first MPC meeting this year for them to adjust the MPR. No. If that happens, this will sustain the market momentum we're seeing.
Boa, Boa Food traded about 11.2 trillion units of shares yesterday. Yes, coming on the floor. So let's talk about these, what I describe as the big elephant meat, so to say, 18 billion ordinary shares listed.
Yeah, for me, it's a welcome development in the market, and who will say kudos to NGS and Boa themselves. Bringing this to the market, now investors have more choice to play in the data sector, the food and beverage sector, and also knowing that these companies are going to also employ more people. For me, it's a generally for the economy and also for the market. This is also going to boost the market capitalization, which is good for us to measure where the market is going. But again, a stock like this coming to the market around the 14 naira, almost eating about 18 billion shares. The share already is large, but the good thing is that this share is not in every even Nigerians. It's in a few hands, and that we would like to see what we call a tight shareholding structure in the company. But as we speak now, the first day was traded, we had about 1.24 billion shares traded. Drop as fast, sharply low to as 11 million as at yesterday, the second trading day. It tells you that these stocks or these shares is not outside there, but the people that are in is important. But also you want to look at the industry where it's entering. What is the valuation in that industry? If you look at the 11 months number that were used to prepare this listing, I think Boa is having about 300 something million turnover and around 78 billion bottom line, which is profit after tax. Pointing out to around the earning per share of around 4 naira 38 and the book value of around 14 naira. But if you look at another one that is that industry that is also big, which is the flour mill. Flour mill turnover for even second quarter results about 500 something billion, and the PAT for me is around 10 billion profit. But if you look at the price, bring the price together now, flour mill is selling around 29 naira, while Boa food is selling around 40 kobo. For me as an investor, we need to look at where will it be now that yes, we know that we're expecting third quarter result of flour mill in the market this same month, and Boa just used the 11 month of 2021 result for the listing. That means we have just only a month performance this December, last December, by end of March. We'll also be expecting their full year result start coming up for the financial ended 2021 properly. Then for me, investors should look at where should I be? A stock that is having about a turnover of almost 500 billion, another is having almost 300 billion. Which one will I position myself? Where will I be? Because if a company is driving his top line, it means that the company is eating into other people's market. That means it's taking position. Then for me, I see more opportunity in flour mill now. But if you are thinking short term, you want to do momentum investing or speculative investing. Yes, if you enter Boa at 40 naira, then at 50, 60, you have made 30%. That is a good business. In less than 1 week, you can run. But you also look at the dividend.
But what's the appetite? What for these shares of Boa at the moment? Because yes, it's 14 naira, 18 billion units of shares out there at the rate of 14 naira. So one wonder, what exactly are they getting at? What do they want to do? Some would have thought that it should be lesser than 40 naira.
That's why I'm explaining all this to you, so that you as an investor should make a choice. They have listed the price at 14 naira. It has appreciated to around 48 naira 40 kobo, which is good. People have been able to enter at the first time, the first day at 14 naira. Good, I made profit. You that want to enter now, is it what you buying at this point? Unless you're a long-term investor. But don't forget that food business is good, but it's a function of other factors. If by next year, by this year now, by March, they remove subsidy, and price of everything in the market goes up, I'll tell you, consumption will slow down for, even though we know that food is essential, we need there are some food that people will do without, and also if you look at the line of products that were listed, fine, these are essential products they have in Boa, conglomerate to that become the food, fine, they are good, it's okay, but investors was consumers was to look at, and this will affect numbers of many of these companies.
You probably want to take us through the direction of the market with your live chart and looking at where the market is headed. Yes, we have a bit of sentiment rising for shares playing in the consumer goods sector and all of that. Yet we've seen inflation going up. It's not likely to come down. So one wonder how these people are ready to make, yes, of course, make their money from it. Because if you're not buying, if more people are, the buying power, once the buying power drop, you should expect that consumption rate will drop for these playing in the consumer goods sector.
I'm happy that you just mentioned consumer goods. I want to go to the consumer goods index to give you a full picture of what is happening in that sector. But the good thing is that the listing of Boa Food has added momentum to that sector, which is good. You can see that people are looking at that sector now and see where they can position. So those that had December year end and those that has March year end. And I believe that this event in that sector now will open a lot of people's eyes to know what to do. But don't forget that there are some companies that are foreign investor has interest in that sector, like Nestle, Unilever, PZ, and all those stuff. Foreign investor has interest. These are things that should guide investor on what to play. If you look at this chart here now, this consumer goods price, consumer goods index for in red, it went down. You can see that this chart, this what's called candlestick is black. It tells you that it still dropped marginally yesterday. Despite the Boa was up yesterday, it was down. It tells you that yes, the momentum for Boa, yes, for me, it's still there, but I'll tell you, many investors are looking at alternative because the price has gone up. For that, we'll see that when we start seeing more of earnings from other sector, that is where we can know where the sector will. For me, I see that there will be kind of misplay or missentiment once we start seeing the numbers in that sector, because we're expecting to pay very fantastic dividend with a 40 naira listed stock around 48. Your yield there will be very slow or less, will be very low. But for those that are looking for momentum investing, speculative move, take advantage of this listing, make your 30%, 20%, 40%, and leave the stock now and come back later after the market has settled on it and find a real position. Because I'm telling you, the market will price this stock where it belongs. That's why they are it was listed at 40 naira. Market will also put it where it belongs at the right time. For me, if you are there, you have made money, be looking up by either to the end of today or Monday, start taking profit. But for those that are not there, just wait. There is a opportunity that it will pull back. That is the beauty of stock market. When you see stock going up, when you pull down, I will call it pull back. It's a opportunity for you to buy. No stock in the market, nowhere in the stock market that you see any stock going up all through. There must be correction, form of profit taking, or form of news that will come. That is opportunity for those that didn't enter at the top to buy at low. For me, if you have missed this rally in Boa, don't panic, don't kill yourself. Just take a position to watch for that position in the market. This is the consumer index, as I said. You can see that after it was listed, you can see the listing price he gave 10%. The next day, it was still down. That's why he gave 10%. And also you can see that yesterday too, that index was still down on red. For me, it tells you that that's industry, that's a sector or industry.
There's a bit of volatility.
Yeah, volatility. Then let's quickly look the way of the general market direction. That'll give us the picture for you to know what to do this morning as investor. Yes, you can look at
Well, I was going to ask you that the market closes today, of course, at the end of the week.
Yeah.
And so where will the market anchor some of the activities? Are we likely to see it ending positive?
Yes,
or in the positive territory, or we say, because of course, like you said, the consumer goods, we saw a bit of decline in that sector yesterday, but closing the week today, how optimistic are you?
Yeah, I will tell you that the Boa Food will still gain today, but if you look at the market performance for the straight 4 days now in this week or last week, last trading day of 31st, there's the possibility of profit taking today in the market, because after 5 days up market, people are bound to take profit. It's anywhere in the world, and profit taking is not, it's not a bad in the market. If the profit today is good, but I see that investors are looking the way of financial sector. Why? because banking sector in Nigeria have shown that they are the most consistent dividend paying stock, so that activities in UBA has improved, in Zenith Bank, in Access Bank, because of dividend expectation. That is that. And also yesterday, among the sectors, so the banking sector recorded green yesterday, 0.44, others were in red. Insurance was about negative 1.38, oil was 0.9 down yesterday. But that is that now that we are seeing this kind of positive sentiment for banking stock because of their dividend payment, also is going to visit other stocks that are consistent in dividend payment. You saw yesterday that UCAP was up because of people expecting dividend from it. All those companies that are consistent in their dividend payment for the last 5 years, that is where people are looking at. And so don't forget that the PFAs also look at the pension fund, the pension index in the market. Most stocks that are making up that pension, they're also gaining, because these are areas people are looking at the end of the year, expecting companies to start paying dividend, and that will support the market.
Let's drive hope now with the direction for the close of the week and of course the coming days.
Yeah, from the chart here, you can see that market was located in this blue rectangle here. You can see market touching up and down here before a breakout, and this breakout for me is likely to to continue in the new week. But today determines where the market will be. But I tell you, whether the people take profit today in the market will still close positive for the first trading week of the year 2022, which is a good news for the market. And I said earlier that our market has changed kind of direction, that the first month of the year, January, has always closed positive for the last straight 2 years, and for almost 12 years closed positive 7 times. And that is that possibility of January closing positive this year is high. And that is that you as an investor, you take advantage to run this month of January and go with the trend of the uptrend we're seeing to make money for yourself. Those that you enter earlier, at the end of previous year, it's opportunity for you to start making take profit going into the year. For me, the market will close positive, and it's a good thing, a good start for 2022. Which means investors should not panic. Rather, we expect that this volatility that we saw in 2021 is likely to repeat itself in 2022. But we as an investor should not panic. If you have survived 2021 with the volatility, also be ready that this year take informed decision. Go for information. If you like, go and pay for it, because that is the only thing. If you want to make money, pay for information and get information and invest wisely. At the end of the day, be smiling, because I said it last year, market does gain about 6.07, while some portfolio for some individuals gain about 50.39% for the year. It's all about information and where you are getting your information.
I think information is key in navigating this market. I think it's a good place to leave it there. Thank you so much, Mr. Ambrose Omodion, for always coming on the show. Of course, I know you'll be here again on Monday. Perhaps then we should be able to look at some of the sentiments that may drive the market ahead of the fourth quarter earnings report that is likely to hit the market.
No problem at all. Thank you.
Thank you so much. We appreciate your time once again.
Thanks for having me.
You've been watching Business Breakfast, coming to you live from our studios here. All right, this is where we wrap it up today on today's program. And thanks for watching. We'll be back again on Monday. I am Frank Omalape. Have a great weekend.